Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the S&P for April 24th, 2025. And with that said, let's go ahead and jump straight into the data. There we go. All right, so we had a pretty important day today. Uh, like I mentioned in the video yesterday, we had Fed Waller speaking. I didn't really pay attention too much to what he said, but he didn't move the market too much. But we started getting some of the manufacturing PMI data and the new home sales. Nothing super crazy there. We did have a uptick in the new home sales though, so that's kind of a good thing for the market at least. Uh, as we anticipated, the 5-year auction at 1 a.m. or 1 p.m. Had a reduced yield, so that worked out almost exactly how we anticipated. Now, the beige book, there's quite a bit to go over, so let's go ahead and get started. And just to kind of preface this plus the whole video, um, I'm gonna try to speak a little faster just so that we can get through everything quickly because I don't want this to be like a 30-minute video since I'm exhausted all the time. I need sleep, so let's get right into it. So before I go over the beige book, what sparked the real big market rally the other day was President Trump said that Chinese tariffs can be halved, and we can expect that in up to 2 to 3 weeks. Um, so I think the market's trying to price that in, very likely. Now, digging into the actual beige book, and I described what the beige book goes over in the last couple of videos, but I'm just going to kind of read a very small summary of what the entire beige book covered today. Excuse me. So, non-auto consumers slowed overall, and that's in all districts. Most districts saw moderate to robust or to robust auto sales. Travel is down in all districts. Home sales rose somewhat. Loan demand is flat to modestly high or modestly higher. Sorry, I can't read my own notes tonight. Energy experiencing modest growth. Then the labor market, there's slight deterioration from the prior report in regards to hiring. Uh, Government jobs were hit a lot harder than any other jobs in regards to positions closing or legislation causing jobs to no longer exist, the DEI stuff. Overall, there's slower hiring in all districts. There's This is kind of the really big takeaway from the beige book here. New reports of mentioned layoffs scattered throughout all districts. This is the first time in any of the beige books in, I want to say in the last year and a half, 2 years, that we've had a mention of layoffs, and that is like the biggest recession indicator you can get is that hiring is slower and layoffs are potentially impending. So that's not good. That's spelling recession to me. But we'll see though. Now, the one positive thing from this page book is that slightly higher labor availability. So um, now that a lot of the immigration jobs were kind of canceled out or deported, we now have slightly higher labor availability. That is going to help the unemployment rate and everything. We are going to see a lot more people who are actual citizens and everything taking a lot of these jobs. And because of that, we've been seeing increase in wages and everything else, and that's what the Beige Book says as well, is that we've been seeing an increase in wages, and that's simply because there's people actually having to pay documented workers instead of undocumented workers. So these government reports and some of these reports from the new legislation is starting to kick in a little bit, as you can tell from this newest beige book. This beige book does have what I do consider a pretty massive recession indicator, which is again uh, new reports of mentioned layoffs scattered throughout multiple districts or throughout most districts. Um, that's a that's a big thing. I think they tried to sneak that in there. That's a really big deal. Uh, the beige book has not covered layoffs at all. Like I said in the last year and a half, 2 years, and layoffs are pretty much the number one thing that triggers a recession. So we will see how this all plays out. Um, let me check my notes really quick before we get to the next part. Okay, so we covered the data sets for today. Let's go over what's actually happening tomorrow. Now, tomorrow, again, uh, the weekly jobless claims, and we're not really anticipating anything crazy, but if something does happen, like if we have a really cool report, or, and by cool, I mean, less, basically higher jobless claims would be a cooler reading on that, whereas lower jobless claims would be a hotter reading. Now, the core durable stuff doesn't really matter. Initial jobless claims, that's again with the same jobless claims. Existing home sales from the report from today, we already got the new home sales. So existing home sales, we can expect that to stay steady or tick upward. I don't know why the data is suggesting it's going to tick downward, but that's interesting. It's not going to really move the market either way. There is the 7-year auction, or the 7-year treasury auction at 1 p.m. Again, we should anticipate the yield pulling downward slightly. Uh, the yield on the 5-year today pulled down quite a bit. I don't expect the 7-year to get below 4%, but if it does, that'll be a pretty big thing for the treasury market, but I really don't expect that at all. Fed's balance sheet, that doesn't really matter for 99.9% of the market. And again, we have Kashkari speaking, and this is later tomorrow night, so it's not going to really, anything he says isn't really going to hit the market until Friday. So that's kind of the data we have tomorrow. Not a whole lot. We also have Google earnings in the after hours, if I remember correctly, and we might have another one, but I remember Google was the big one. So mainly just Google. We'll see how they perform with that earnings. Uh, yeah. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, let's show our moving averages and Bollinger Band and ensure we're on the daily chart. And let's go over the levels quickly. I forgot to turn my page, so one moment. Alright, so the market closed at 535.42 and the 5-MA is at 525.72, so under the market price currently. We should expect the 5-MA to pull above the 528 level or above. That's my expectation anyway. It should start pulling upward quite a bit. Now, we have the 10-MA at 531.25, so that is below the market currently. We have the 20-MA at 536.58, which is pretty much essentially right where the market closed. I mean, granted, the market closed at 535 instead of 536, but dollar less, who cares, right? Very, very close. The market is either going to test this level out or reject it. And since we were actually above that level today, this might be a rejection if we do not continue to see buying from here. Now, the 200 MA, again, it's not super relevant right now just because we're far away from it, but it is at the 570.11, so yeah, 70.11, not 711, 70.11. It is pulling downward, but we're still quite a ways from that, so we are still technically in the bear market. Now, the Bollingers I'm not going to really discuss right now because we're still far away, and if we're going to head to the bottom Bollinger, we're going to test the 5 mile first, so we can focus on that more. Okay, so let me go ahead and hide these. Now, again, as I mentioned, we did have a potential 20 mod test today, and how do we know that? We had the market price pull far above it and below it. And when we test a moving average, we generally see the price go $1 to $2 above the price and $1 to $2 below the price. Well, we definitely had that happen today for the 20 mall. So was the 20 mall tested today? It absolutely was, but does it mean the market's done with that level right now? Not entirely. It could be, and I will get into that in just a second. But the overnight is currently down, so it's down almost or negative 0.20%, so a decent amount. It's at 534.50 or 45. So that is starting to creep into the 5 mile range. Now, let's kind of talk about this range between the 20 mile and the 5 mile, which this is really where we are right now. And um, just to expand that on the screen to really identify that, we're between this range right here, and I can actually draw that. We are between right here. Now, between this level, there's kind of 4 different ranges we need to watch out. And that's the upper and lower bounds of the 5 mile. So the upper range of this 5 mile and the lower range of the 5 mile. And then the upper range of the 20 mile and the lower range of the 20 mile. So what does that mean? As I mentioned, again, when we test a moving average, we test generally $1 to $2 above and below. So with the 5 mile right now, assuming it's going to be at that 528 range, if not a little higher tomorrow, then that means that the lower or the upper range of the 5 mile is going to be at least 530. So technically we're only $4 away from that. If it opens at 529 or 530, then that can pull up towards the 531 to the 532. But for now, it's at 530, and the lower range of the 5 mile is at 526. So that's very reasonable to happen tomorrow, or within the next few sessions. And the 20 mile is at, so the upper range is at the 538.50, so above it, and then the lower range is at the 534.20. So between the lower range of the 20 mile and the upper range of the 5 mile, there's really not much room. There's only a range of between $2 to $4. That's kind of in between them. So what are we looking for to happen? We are looking for the market to take one of those ranges. So the market price is currently, let's see, right here essentially. We want either, sorry, I'm just marking this out, just one moment. We either want the move down there, or we want the move, where is the 34? Right in there. It doesn't look too large, but let's go to like the hourly chart and it'll look a lot larger and more pronounced. So that's kind of where we need the price to be tomorrow. Is that it's right here at the 534.54. So we are still at the lower bounds of this 20 mile range. We need to be between this that range and that range essentially. Sorry, let me just make this more clear. Okay, so where this yellow is right now, um, that's kind of the free zone between the 5 mile and the 20 mile. So it's going to be very clear where the market goes. Either the market is going to stay above this range, right? Or it's going to pull below this range. Okay, there's really no in between, even though there's clearly a gap in between. But there really isn't an in between. The market is going to take one of these ranges. It's very unlikely that we just see it kind of like sit in between those ranges. It could happen just to spite me. Um, we've seen that happen plenty of times, but very likely it's going to take one of these two ranges. And what happens with this is that as each session goes on, I'm going to delete this because I want to, come on, I want to kind of redo my circles here. So they're not really like circular zones, they more curve in towards each other. So the 20 mAh is pulling down each session, while the 5 mAh is pulling up each session. So this gap in between is shrinking, literally by the minute, uh, as the market trades. So that's you know that's your area to how do I describe this? This is your area to position. Um, if we start getting to the top of the 5 mAh, then you take short dated calls as a hedge against long dated puts. You take the top of that 5 mAh and you ride it all the way down to the bottom of its testing range, which is going to be around the 526. Okay, so I'm going to delete that. But do you understand what I'm trying to say here? So you need to take a short dated call at the top, long dated put, so like 2 to 4 weeks out. Ride the put downward if this is going to be a 5 mile test. Uh, Sell the calls that you opened earlier, the hedge calls, the short duration calls, and then you take long duration calls here. Okay. Inversely, if we get to the upper level and we get to the 20 mile range, then we do kind of the same thing here. We hold on, I just got an important text. Apologize for that. Okay. Um, Kind of the same story here. So if we get to the lower range of the 20 mAh, which we currently are, then that's when you take long dated calls and short dated puts. You write those long dated calls and short dated puts up to the top. You cut the short dated puts and you take long dated puts at the top to have a really quality straddle. Tried to explain this in my video the last few days, but I don't know if I really explained it very clearly. I don't know if I explained it very clearly in this one, but that's kind of the goal right now for this, the next few sessions. Now, going over structure really quick on the hourly, and I will try to make this quick because my wife wants to go to bed. So, we got this cup filled, okay? And we talked about this yesterday. What happens at the top of a cup? A bearish structure. Okay, and there has been some confusion about what the bearish structures are. Head and shoulders, inverse cup, something to tell us that the market wants to pull downward. Okay, and this is where we get our thesis of retesting the 5 mAh. And sorry if you can hear my daughter screaming, she's doesn't want to go to bed yet. So retesting the 5 mAh level. Okay, that kind of gives us a handle on our cup. Now, if we don't fully break through the 5 mAh, and this is going to be a bullish structure, then what we will see in this area is starting to be a bullish structure to head upward. Okay, because again, if this is bullish liquidity, then this is meant to break out upward, and we want some sort of structure to tell us that we are going to head upward. Now, this is on the hourly time frame. You can identify these structures on like the 5-minute time frame. Just to kind of go over like today's session, we see this massive head and shoulders. Okay, very likely that's telling us, okay, this is the top of the cup, and we talked about this. We were looking for the structure. We were trying to identify this. We got our structure. Now we should expect the pull downward. And again, what's the difference between what the bulls and the bears want here? The bulls want the liquidity pulling back upward. So as we test that 5 mile range, they want some form of inverse head and shoulders, cup and handle, some form of structure telling us that we are going to head back upward and that this selling is done. We're not going to fill this gap downward. Now, the bears don't want this structure to fill out, or don't want the handle to fill out anyway. What the bears want is continuation all the way down to the 508 to finish out this inverse cup. Okay, so what we're looking for in this area as we continue to trade is basically, do we see bullish structures forming? If we don't, we continue writing our puts downward. If we don't see bullish structures forming, we continue writing our puts downward. Okay, we will then wait until we get to the bottom of this cup, and then what will we look for at the bottom of this cup? Bullish structure, right? Because that's going to tell us we are going to build an inverse handle off of this cup to head downward further. And, this is something we talked about. Now, let's just delete some of this. Okay, I guess I can't go back further than that. So let me just manually delete this really quick because I do want to highlight a larger structure we got going on here. Now, we have talked about a larger inverse cup and handle. And we've been talking about this for the last few weeks now. Okay. So we have that, and pretend actually didn't whiff the side there and it actually, picked up those candles. Technically, this is still part of that inverse cup and handle. This can be a double top right here. And I believe, let's see if these levels are within the same range. Okay, so this does look like a bullish cup just because it did pull upward slightly above it, and we did get our bearish structure, but that doesn't mean that this can't turn into a double top, which again, that's also a bearish structure. That is, it's kind of like an inverse cup and handle, but instead of the handle forming some sort of bear structure earlier and pulling down, it instead had a breakout, and then it still forms the bear structure to pull downward after. Okay, so that's what we're looking for right now. We're looking for either entering into the 20 mile zone or entering into the 5 mile zone. We don't have to make it complicated. It's really that simple for the next few days. See if this bear structure continues and if it gives us our handle. If it does give us our handle, then we're going to test the 5 mile. If we test the 5 mile, let's see if we get both the upper and lower bounds of it. If we get the lower bounds, do we actually sit there and continue pushing downward, or do we start building a bullish structure to pull upward? That's kind of the thesis for right now. I don't see continuation in the current. I just don't see it currently without retesting that 5 mile. And as I mentioned, the 5 mile kind of has to be tested throughout each move. And as we tested the 10 mile, we then tested the 5 mile, came back up, tested the 20 mile. So what happens after testing the 20 mile? Generally, we're gonna come back down, retest the 5 mile. And then after retesting the 5 mile, you either come back up, retest the 20 mile, and head back upward, or you go back downward and retest the bottom Bollinger. So that's kind of where the market is. Important area, but there's really a lot of places to set up some quality positions. So try not to sleep on it. Uh, Make sure you get those set up. Make a game plan. Like I mentioned, write down the bottom and the top bounds of the 5 mile and the 20 mile, and that tells you your targets exactly of whether we're going to be testing that zone or not. So I'll stop ranting and rambling. I hope everyone has a good day tomorrow. Trade safe, and I will talk to you in the next video.